Hey, this is Justin with DayTradeTheMarkets.com on Thursday, April 11th, and I wanted to look at the S&P today, the E-mini, and the bulls were obviously again in control, but I wanted to look at a couple of things today. I wanted to look what we call what we call a confluence setup or a trade opportunity. Then I wanted to kind of talk about another aspect of when the market is more one-sided or really controlled by, in this case, bulls, and then show some evidence that shows that the market's becoming more two-sided or consolidating. So with that said, let me show you the confluence idea first. And what I mean by confluence is you can see we have a lot of different market information here. We have a lot of different real-time information. We really focus on these relative aggression bars and high velocity moves. But we also look at support resistance and deceleration and divergence and a filter. So those are the real-time aspects of a chart that are going to come in, obviously in real time. We also like to look at what we call a bigger picture bias and bigger picture key levels. And that's the same idea where we're looking, instead of looking at the bias right in the immediate term, we want to see what the bias has been over the past couple of days and past few weeks, and clearly in the E-mini S&P, as we're going near all-time highs day after day, the bias is pretty clearly up. So the idea of what we call a confluence trade is when you have a lot of evidence coming together. So in this case, almost all of these in the situation I'm going to show coming together at one time, you have a lot of edge. Okay, so you don't necessarily always have to have 5 or 6 pieces of evidence coming together to have a good trade setup. That's not really the only way that you would want to use this. But when you have a scenario where you've got a lot of evidence lining up, it doesn't mean it's 100% by any means, but it's a very high probability or high expectancy type of a setup. So with that said, let me talk about the bigger picture bias and key levels, and then I'll talk about how some of these other real-time things set up on one of these trades. And then I want to talk about more of the one-sided versus two-sided aspect as well. So as we go back to our chart, and again, this is a 1-minute chart. You can use this on any time frame, literally from a 10-second chart to a whatever daily. The same logic would apply on any time frame. But on the ES, I kind of like a 1-minute chart as more of a day trading chart. And I'll look at some bigger time frames as well for a little bit of a basis. But obviously, heading into today, our bigger picture bias, our longer term bias is up. That's pretty clear. And the level that we really wanted to monitor was this 1586 area right in here. That was kind of our next target, our next area that we wanted to monitor to see what would happen. Okay, so as the market opened up today, we also like to look for what we call our first major structure, and that's in this case kind of a combination of this. You can see this box, that's what we call a high velocity move, and then this level 2 or strong buying aggression bar. It's not quite extreme like a level 3, but it's showing you there's very, relatively speaking, very strong buying aggression coming into the market at that time frame right there. Okay, so the fact that the low of this held and we had some follow through higher is telling us that bulls are pretty much in control, and until something changes, until we have some follow through of a selling structure, we have to assume obviously that bulls are in control, and that fits with what our expectation is heading into the day. And so you can see then that the market rallied above this 86 level right here, spent some time above 86, and in the meantime, again, our bigger picture bias is up. We're above this bigger picture 86 level. We have a support zone, this green zone that forms here. Our filter is green and then dark green, so very bullish at the time. So you have a lot of pieces of evidence coming together at the same time. Again, bigger picture bias, support zone, filter, earlier structure showing that bulls are in control. And finally, we have a deceleration here, but finally we have what we call a rejection of a selling structure. So this is a level 2 selling aggression bar, and you can see within a bar or two that high was taken out. So that's a very strong rejection of an attempted move by sellers. Okay, so you can see there's a lot that is, there's a lot that is lining up right in this area. Okay, again, with that 86 level and with our bigger picture bias being up, everything's turning over. So that's kind of what we call confluence, a confluence of events. You can see there are 5 or 6 pieces of evidence that all line up together, including structure of the bullish structure there with follow through, the selling structure there with rejection. Okay, so that's kind of that ideal confluence setup. Pretty high edge trade. It doesn't mean it's always going to work out, of course, but it's a pretty high edge opportunity, and really that's the whole point of this tool, is try to get a little bit better real-time information to help you better determine when you have better opportunity than when you don't. So you can stay out of low expectancy trades, get into more high expectancy trades, increase your edge. It's really about weighing the risk versus the opportunity, and that's really what this tool, the intention of this tool, is to do. So with that said, that's kind of one thing I wanted to show. I next wanted to show, and you can see when you just look at the price action today, in hindsight obviously, the bulls were pretty well in control here, and then we got more two-sided or consolidating in here, and you can see that we oscillated between the support and resistance areas here toward the end of the day as well, after we had tested that support. But I want to take a few things off the chart just to show it, make it a little more clear. I just want to leave on what we call our level 2 and level 3 aggression bars on our high velocity moves, and talk about what we call our roadmap concept to try to, well, you know what, let me just do that and I'll make sense of it in just a moment. Okay, so I've taken off everything but the high velocity moves and the level 2 and level 3 bars, and you can see the support resistance zones are gone. The filter down here is gone. We're just kind of looking at the chart naked, so to speak. But what we like to do is when we have especially the first structure of the day and especially level 3 bars, okay? So the first structure of the day, if it's a level 2 or strong, let me give you a little background on that. The idea here with these relative aggression bars is that what we're looking for is we're trying to look under the surface of the market at the order flow, and not just look at raw data, raw order flow, but really make sense of it, because it's the market really only moves when one side, buyers or sellers, is more aggressive than the other. So if you can tell in real time, number one, which side is more aggressive at a given time, and then number two, not just which side, but to what degree that aggression is happening. Is it moderate? Is it strong? Is it extreme? And you can see that in real time. You're getting a much better feel for when the market is truly controlled by buyers or sellers at a given moment. And so what we like to do is look especially at these level 3 bars, which don't happen very often, and then a little bit more so at these level 2 bars. And level 1, you got to be careful. They're good information. They can help you manage trades and so forth, but you don't want to get too fired up about those. But really focus on these level 3 bars when they come in, and ask ourselves, for example, if there's a buying aggression bar, our expectation, level 3 bar, our expectation would be that the low would act as support, and then if we got some follow through, then it's most likely telling us there's a pretty good vertical move ahead coming. Okay, on the flip side, if we have a buying aggression bar, we can't get much follow through and the low gets taken out, that's telling us with relatively good certainty in the short term that that's a bit of capitulation. The market's probably heading the other way. Same idea with level 3 selling aggression bars. Okay, so with that said, it kind of gives us a little bit of a roadmap. So I want to talk about this concept that we like to talk about of one-sided versus two-sided or consolidation. And so what do I mean by that is if you can determine if the market is one-sided, in other words, controlled by buyers or controlled by sellers, then number one, if the market's one-sided controlled by buyers, number one, you don't want to be fighting that. You don't want to be on the short side. You don't want to try to be a hero. Okay, avoid low expectancy trades. That's job one. And then job two, that you can have a little more confidence being in the market on that side. So then you can focus on finding a low risk trade entry opportunity. Okay, and then number three, you can hold on to trades a little bit longer if you know the market's more one-sided versus more consolidating. So in this case, again, with our expectation, you have to put the market in context as well. Our expectation is that the market's going to head higher, so we're looking for that. You can see that our first major piece of evidence is this high velocity move and level 2 buying aggression bar. Okay, so does the low of this buying wave hold? Yes. Does the high get taken out? Yes. Okay, at that moment in time, short term, you have to assume bulls are in control, and again, that matches up with our bigger picture bias. Bulls are in control, so you don't want to fight that, and you would not want to fight that unless something changed in the future. Okay, so what's our next structure? It's a selling, a level 2 bar, not a level 3, but a level 2, and you can see, is there follow through with the selling? No. In fact, there's very quick rejection. Again, it's telling us this buying wave is very firmly in control. Here's a level 3 extreme buying aggression bar. Okay, so we ask ourselves, can the low of this hold? Number one, and then do we get some follow through? You can see we get some follow through, but to the tune of 3 or 4 points after this formed. Okay, then we come down and test it, and the low is tested certainly. It gives a little bit of a back and forth, but no selling has come in. So essentially that low held. I mean, you could argue that there was a bar or two below that. It's giving you a little bit of a red flag, but essentially it held. It wasn't until this bar here, this level 3 bar, okay, the expectation is if the bulls are still firmly in control, we should get some follow through. You can see we tested the low, We certainly bounced to the range of that bar then from the high, but then we didn't get any follow through above this bar. And then we took out the low and did so on a high velocity move. And at that point, it doesn't mean sellers have taken over, certainly not in this context as well, but it's telling us this pure wave of buying has at least come to an end. So now, if you're more aggressive, certainly you could be playing to the short side, but you at least know it's not as dominantly controlled by bulls. It's more two-sided. And if you recall, we had some support resistance zones in here, and then another one that came in there, another one, down in here. That can also help you as well as the filter and that sort of thing. But just kind of looking at this, step one, follow through or rejection, follow through or rejection of selling, rejection. So bulls are in control. Follow through, yes, bulls are in control. Follow through. Here's our first time we don't have follow through. Okay, that's telling us we've gone from more one-sided bullish control to more two-sided. Okay, and then you can see that was even confirmed when we got some more level 2 bars that really had no follow through on the short side, no follow through on the long side, really no follow through. So it's just, it's the end of the day. But it's, what I'm trying to point out here is just this first piece of the puzzle, that one-sided buying control, two-sided activity. Okay. Obviously, if you know the market's one-sided or two-sided, you can adjust your strategy, your risk tolerance, your expectation on trade exit, and that sort of thing. So hopefully that makes sense. I know this can be a little complicated if it's a new concept, but that's the general idea. That's what we're trying to do. We're trying to put the market in context, not just focus on mechanical, robotic trade entries. Put the market in context. When you can put the market in context, then you know which side to not be on, number one, again. And then number two, you can focus on low risk, high reward opportunities instead of the other way around, which a lot of people end up doing. And I know I did this for years before I learned better, is you focus number one on your trade entry ideas. Well, if A and then B and then C happens, if my rules are met, then I'm going to take a trade. And great, if the trade happens to be in line with the context of the market, you win. If not, you get your head ripped off. But if you can, instead of doing it that way, focus number one on putting the market in context and then focus on low risk entry and optimal trade exit, you put the odds a lot more in your favor. It doesn't mean you're going to win every trade, but you're stacking the odds more in your favor. So hopefully that makes sense. You get the general concept of what I'm talking about. You can see this is not some magic system. It's simply a tool that's giving you very good information that you can use to make better decisions. And if you can make better decisions, you're going to get better results. So been chatting here for a bit long. I will cut the video short now. But if you have any questions about this, certainly let us know. All right, we'll talk to you soon.